And it's our pleasure to welcome back to the show Rob Lees from Mortgage Choice for his finance segment. And we're going to continue our conversation around the potential, I guess, the good, bad and the ugly around, buying property or potentially or building a studio or a granny flat or something like that on your property. How are you, Rob?
I'm good. Yeah, very good. Thanks. I've got an additional grandchild. We had a little girl born on Thursday.
How exciting.
And her
How many
name is
grandchildren is that for
Daisy
you?
Love.
Oh, Daisy, how sweet.
Daisy Love. I think my parents' generation had, my grandparents' generation had lots of daisies.
Yeah,
so it's
it would
kind of
have been,
done
actually.
a full circle. But it's
Yeah.
actually a really cute little name, and she's a cute little girl. And that's it's actually, if I include my step grandchildren, that's actually 11 grandchildren I've got
My
now.
heavens, no wonder you've got no hair, Rob.
Yeah, that's right. That's right.
That's sensational. Congratulations.
Yeah. So no, it's good. Really nice.
Oh, that's awesome.
Yeah.
So talk to us about these granny flats.
Yeah, well,
or
look,
studios or...
Yeah, well, they're very popular. A lot of people are wanting to get granny flats for a whole lot of different reasons. Sometimes it's to house the grandparents. I think it might, or the parents. Sorry, the parents. In my case, I think we'd like a little bit of space from all these grandchildren. We love having them over, but all being in the same house would be a little bit of a challenge. But some people do it for that reason. Some people for a dual income stream. So a lot of investors are opting for properties that have a granny flat. What's been very popular is corner blocks where they can actually get a separate access. And so there's a good income return there. So it's quite popular from that perspective. Yeah. And from a lending point of view, it isn't really that hard to get a loan for a property with a granny flat, although in some cases you still have to just be careful that it's within lender guidelines and maximum LVRs. But it isn't really that hard, really.
So we were just chatting before with with Karen about getting council approval and all of those kind of things. What kind of steps do the lenders make you go through in order to be able to be approved to build a granny flat?
Well, in some cases, it just depends. So usually if it's a detached granny flat, a lot of lenders will just give you the cash out. So
They don't do it as a building, like a
in
construction loan?
In some cases, because it's detached, they will actually just allow it to be a cash out. But there's others. There's one in process right now, and that's it's about a $250,000 loan, and that is a detached granny flat, but it's a
big
fixed
granny
price
flat
contract.
Some of them are quite like.
It's in Glenbrook. It's very nice. I mean, that was a new build on the house first, and now the granny flat for the parents who are from India, and they're going to migrate and have a nice, and it's got in Glenbrook, and it's got a rear access via a laneway.
Council regulations have been really relaxed in relation to all of this. It's really surprising what you can now put on a block.
It's interesting, isn't it? Because you say that in one breath you say that, and in another breath you kind of look down at the likes of, say, Jordan Springs or Glenmore Park, where the land size is just so small. There's no way.
Well, that's right. You can have, some blocks in some of the new properties are only in the 250 square metre sort of
they don't fit the
range.
house, let alone the granny flat.
There's not much space around it. So look, it's viable in terms of qualifying. A lot of lenders, if it's an investment property with a dual income, they'll use the potential rent for the granny flat.
Does it need to be council approved and all of those kind of things?
Well,
to
if it's a construction of a house and granny flat, yes, and there's progress payments that'll need to be council approved. But if there's an existing dwelling and they're building a detached granny flat, it may be in some cases some lenders will just give the cash.
What if you were buying a property that had an already built non-council approved because it fits within a studio or whatever that might be?
Well,
can I use potential rental income?
If it's generally with owner occupied, the lenders are a little bit iffy about that unless there's a lease in place. If it's an investment property, they're more inclined to use the rental income, but I think it's probably better if you're buying an owner-occupied property and the granny flat's being leased out. It's better to assume that you're not going to be able to use the rent. You can in some cases, but I think it's. I don't think it's a given.
A lot of times they don't.
It's not a given.
And if it's going to be for, let's say, elderly parents,
you're not going to generate a return, are
do
you?
they have to go on title, like for lenders, or?
Well,
Because technically they don't have anything.
Well, it depends how it's structured. So, again, actually, this is one of the reasons why the lenders aren't wanting to use potential rental income for granny flats if it's owner-occupied, because sometimes people aren't actually planning to rent it out. They're going to put their elderly parents there. So that's why lenders are going teenage kids. So they're going on the more conservative side. A number of these we've done. I suppose it depends what sort of money, if any, the parents or we'll call them the grandparents, the elderly parents or whatever, are putting into the deal. If they're not putting any money into it, it isn't really such a big deal. And then the owners of the property, they're the only ones on title. The issue is when the elderly parents are putting money into the deal, and that's where we
quite often
come across some of
paying
these legal.
For the build, aren't they? Do you find that?
Yes. So there's issues with that as you've found, and I've facilitated family meetings where this has been done, so that some of the estate planning issues can be discussed, and then that's referred. Then I've referred them on to a lawyer to have that sorted out. I think of one couple, clients, they brought mum onto the title because she was putting money into it, and that protects her by being on title, because the other thing, if the grandparents aren't on title, they can be kicked out too.
Yep.
So being on title protects them. But the downside of that is this couple now wanted to leverage off the equity to buy an investment, and difficulties with that because Mum's in her 80s, and she would then have to go as a guarantor on that. So it creates all kinds of difficulties there. So it's fraught with all kinds of...
Yeah, because as I point out to my clients, like, they've just paid, $250,000 to build a granny flat that they're moving into, and then, son and daughter-in-law get divorced.
Absolutely.
I haven't seen that one.
That's right. Yes.
And they've got and then they've got to, get their money back out, and because they've put money in, and it just becomes.
Well, the other issue is that if, in the case of the elderly parent moving in, she's put, and I'm thinking of this example a little while ago, it might have been $200,000, and then if she passes away, then for them to retain their property, let's say it's within a very short space of time, then that family has to borrow to be able to pay the other beneficiaries of the estate.
Yep.
So one of the things we discussed in the family meeting that was actually documented by the solicitor was that if that happened within the first 5 years, well, they actually wouldn't have to pay the beneficiaries for 5 years.
Yeah.
So that if mum passed away in that short-term period, they'd have 5 years to get things sorted out.
Yeah.
So those sorts of things need to be addressed, and it can't be done without looking at that in the context of the whole estate planning.
Yeah, and also the lives of whoever you're moving in with at the time. I mean, people's life can change dramatically very quickly, and what happens. So we normally do deeds of family arrangement, but from a lending point of view, like I've got one who are on their parents had the large block of land at Kellyville. Then the two children have each built a wing onto the house, as their. But now that they want to use the equity in that for investment, it's a real hassle because mum and dad are still on title.
Yes, and that's the difficulty, I think, too, over time, if that goes on for a long time.
Yeah, and if mum and dad come off title, then they lose their pension because they've just gifted $1 million.
Yep.
That nobody thinks about.
I think this is a real issue, which we sort of touched on a couple of weeks ago in relation to our ageing population. And this is just another level of complication, isn't it? Because we all want to do, as lenders, we're bound by responsible lending laws, which seems to be consistently tied to a 30-year term, which I'm struggling with at the moment because of all these changes that we're seeing. And that's responsible lending shouldn't necessarily be about the ability to repay a debt within a certain time. I think
the definition of responsible, what is responsible, constantly changing,
isn't it?
Yeah.
It's becoming more and more conservative.
And as our society changes, where they're saying that, so you've got the baby boomers that are all sort of, they're going to be living longer and but retiring at sort of 60s and 70s, but living into their 90s and beyond. How do they survive in that 30 years of no income earning capacity? Then you've got the Gen X, which is my generation, that we're all sort of madly trying to make sure we've got properties that can substantiate our parents. And then as you guys have unfolded, there's another level of complication that we add to that. And then you've got the Gen Ys that they reckon they're going to live till 120.
Yep.
So, and they're all living in apartments, and they've got a different lifestyle again. And I really... I've spoken a couple of times about it today, Rob, the Royal Commission that we're seeing, and I'm all for the Royal Commission, but just this responsible lending and this movement that we're moving towards where people are living differently, and we're still, our banking and lending practices are still from back in the...
It hasn't quite caught up.
It hasn't, has it?
It hasn't caught up with what is an asset either.
No.
Like, I'm sure Bitcoin isn't taken into account by any lenders.
I doubt it. Although it depends how specific.
Yeah.
I mean, and the thing is, if that's another topic.
Yeah.
But it's so volatile.
But the way in which if you look at the millennials coming through, even job, banks keep looking at job security. Well, they're going to have, 37 jobs and 17 careers or something in their 120 years.
That's right. 45 jobs they're going to have.
How does that fit in? How's that ever going to fit in?
Well,
to basic lending practices.
It's not there. And it's very much a changing world. And I think banking has always been conservative.
Oh, definitely.
And they've got to
it's like law.
manage risk, and it's working out, I suppose, the parameters to manage that risk.
I think it's really interesting. I really kind of wonder the future, which we said before, digitally, it's moving so fast, but there's so many other things that are moving at almost just as fast a rate that we're not looking at far enough into the future around I tell you what, I could just go forever. You talk infrastructure and the airport and There's just so much that's happening in the future that we're
we're always
preparing
looking at
for.
what has happened. And, probably up until, 10 years ago, there wasn't such a great shift from the from banking days and shares and things like that. But now there is an absolute shift.
Anyway, we could talk about that forever. Thank you so much, Rob, for coming in. If anybody was thinking about, maybe having that conversation around housing elderly parents and building a studio or something, where can they come and have a chat?
And, we don't just look at the loan side. We try to look at the big picture because there are a whole lot of other issues. But just give us a call on 4739 9749.
Fantastic.